You're watching today's market comment here at XM.com by Mario Sachikiriakos. I'm Cristina Marujos. A mixed batch of economic data releases left the U.S. dollar and equity markets without a clear direction on Friday. On the bright side, the U.S. employment report for December exceeded expectations, with non-farm payrolls beating forecasts and wage growth coming in hotter than anticipated. However, a sharp drop in labor force participation served as a warning that employment conditions are not quite as strong as they seem at first glance. This was quickly followed by a disappointing ISM non-manufacturing survey. The dollar traded higher directly after the employment report, but its gains soon started to evaporate, and it ultimately closed the session unchanged. It was a similar story in the equity space, with shares on Wall Street closing a volatile session near their opening levels. Overall, this data set did not have any real impact on the anticipated trajectory of Fed interest rates. This elevates the importance of the upcoming CPI data on Thursday, which could break the deadlock in the dispute over how soon the Fed will slash rates. In the commodity sphere, gold prices traded in similar fashion to the U.S. dollar and equities on Friday, closing near their starting levels after whipsawing around. That said, bullion assumed its decline today, early on Monday, feeling the heat of a slightly stronger dollar and some adverse bond market moves. In the bigger picture, the fundamental outlook appears favorable for gold, as it is simply a matter of time until interest rates come down. The trend of central banks purchasing gold directly is another bullish development that could persist for years if the geopolitical climate remains unstable. Speaking of geopolitics, worries about a conflagration in the Middle East intensified last week after Israel struck the capital of Lebanon to kill a senior Hamas leader. These escalation fears boosted oil prices, but the move has already started to run out of juice, following news that Saudi Arabia will cut the price at which it sells crude. This is either a sign of concern about weakening demand conditions or an attempt to stop foreign producers such as the USA from stealing market share away. Either way, it's a gloomy signal for energy prices. One of the biggest players at the heart of the Chinese shadow banking system filed for bankruptcy on Friday, providing the clearest indication so far that the property market crisis has started to infect the opaque lending industry, dragging local equity markets down today. This was today's market comment here at XM.com. Have a great week.